Greetings everyone, Joseph James here once again with your nightly newsletter. Of course, today was Friday the 13th, here November 13th, 2009 in the live trade room. Before we talk about the trades we took today, had a wonderful day today. I want to encourage you guys to check out our YouTube page, a great free resource online, guys, / School of Trade. While you're there, guys, please subscribe to the channel. That way you get all the new videos. Rate and comment on this video, and don't forget, right below this video, click on that link for our track record, and you can see all the track record we've had over the past year in our live trade room. 46 ticks, that's 460 in our pocket. Weekly total 1660, monthly total down bottom here at 37.95, and of course we are shooting for that $10,000 goal this month. We got to make up some ground here though. We got 2 full weeks left. We'll keep you guys posted as we make our way through the month of November. Term of the day today, guys, is range charts. Now, range charts, what are these? We hear this question all the time in our live trade room. There are really ultimately 4 main types of different charts. There's time charts. You've got volume charts, which of course are going to tell you how much volume is in each bar, so 1,000 volume per bar. A tick chart will be 1,000 ticks or 1,000 trades per bar. And then you've got this, what we use here, which is range bars, right? Range charts, which is going to have the specific amount of range per bar. So an example would be a 10 range chart would have each candlestick would have 10 ticks of trading range per bar. Now, of course, a new price bar will be created every time the prices move that specific range or that specific distance. So again, an example would be a 4 range chart. That means that each candlestick would include 4 ticks of range per bar. So a little bit different obviously than your time bars because there's no time involved here with range charts. There are some specific reasons why I choose to use the majority of my charts are range bars. First of all, it's easier to see patterns. It's a lot easier to see those patterns because your charts are going to look a lot cleaner. Now, if you don't believe me, open up a 1-minute chart and compare that to a 4-range chart of, say, the Russell or the S&P, and you will quickly see a range chart. It looks a lot cleaner. It's not as sloppy as a time-based variable, which of course will have different sizes of different candles. You'll see what I mean. Open up a range chart and you'll see it looks a lot cleaner. One of the biggest benefits, though, is going to be allows me to manage my risk. Having range charts, because each bar is a specific amount of range, I can simply place my stop, say 1 or 2 ticks above the high bar or below the recent low bar, and I'll be able to calculate very quickly how much ticks of risk there are based upon knowing the range of that bar is always the same number of ticks. Now, of course, we're going to show you guys how to use range charts tomorrow morning in our trade room. 7:45 a.m. Eastern Time, we open up the room on Monday, so make sure you guys come out and join us for that. Next Tuesday and Thursday, we have free webinars at 11:30 Eastern Time. Come out and join the live trade room. Pretty much watched all of our markets, but didn't see very much happening this morning. We, of course, got our day started, though, just before 10 o'clock this morning. 9:45 was the first trade of the day. We knew right away this morning, didn't see a lot of conviction, didn't see a lot of volume, didn't see a lot of real strong moves, a lot of choppiness, it looked like a summer Friday. Trend here was, of course, going to the upside. So with that upward trend, we, of course, have this horizontal red line here at 76.17. Now, above that red line, we have your swing high. This swing high, of course, marked automatically with my indicators. That swing high, of course, here at 76.17. Broke above the 15. We then made the swing high at 17. And then as you guys can see, made the swing high right here. We broke back above that high. Entry there at 20. We took 4 ticks. Of course, 2 contracts off at 4 ticks, locking in 8 ticks total for $80 there in the first trade. So a good example, guys, here of how what we're going to see here is obviously very small winners here throughout the day. We didn't see very much running, so we're very happy, of course. We manage our trades by moving our stop up to our point of entry when we fill our first target, because as you guys can see right here, the price came crashing right back down, and if we wouldn't have managed our trades properly, we would have given that money right back to the market. Let's keep moving. Next trade wasn't too far along thereafter, just after 10 o'clock here, guys. As you can see, once again, we're continuing to trade with the trend here. Short-term trend was up. We broke above this red line here, you guys can see, this horizontal red line right about 75.82. Of course, 82, we then waited for this swing high. The swing high being made at 85, and then we broke above that swing high, making sure momentum was on our side. We had increasing pace of the tape on our pace of the tape indicator, and of course getting long here. Fill there was at 88. We took a target here, 8 ticks. Now kind of a funky fill here. The market was kind of whipping around a little bit here. It actually skipped my first target, filled my second target of +8, ended up wrapping up 14 ticks there after we finally got ourselves out of that trade for $140. And as you can see, guys, once again, very important we manage our trades correctly, because if you wouldn't have managed that stop, we would have let this price action curl all the way back over and take us back out of the market. It doesn't make any sense to make some money and then give it right back if we're not going to manage our trades properly. So follow your rules. Our rules always tell us exactly how to manage our trades, and a great example there, guys, of how managing our trades properly, getting in at the right time, of course, means we're never going to have a winner turn to a loser, and we, of course, continue to pad our pockets here. This one got us 14 ticks, so 8 ticks in the first one, 14 ticks on the second one, and now, of course, here for our third and fourth trades of the day, again, same thing, guys. We're trading with the trend here. Now, with this specific market here, with this particular time of the day, we were looking at this 76 level here. We had this 76 level right here, okay? And the 76 was showing to be a very key level of resistance. We saw a couple times today where price tried to come up, got smacked back down, came back up, got smacked back down, came back up again, and then this time, right, we were looking for it once again 4 or 5 times later, trying to break above that 76 even level here on the crude. In fact, in the trade room, my exact words were, when we get up above those highs again, we've got to be careful because we don't want to be the first ones trying to jump in early if this thing starts to lift off. So you can see here, guys, above this 76, we saw the first breaker long pattern. Now, I skipped it. Okay, I skipped this first breaker long. The reason why I skipped it is because we knew that when price broke that 76, I knew we were going to probably see this thing get swatted back down again. So I waited to see that breaker long first, right? That first move above that 76 level. Once we saw that first breaker move, right, we saw the conviction as it began to run through these highs. I then said, everybody, right, now we look for the entry. Once we've seen that breaker move, we now know we have conviction in the market, which now, of course, gives me the confidence that I need to get in for the next move here. So we saw, of course, we broke above this horizontal red line. We made our swing high at 19s, right? 76.19. Got filled there at 21s, and we took 4 ticks, total of 8 ticks out of the market there for 80 bucks on that first trade. But it wasn't too long thereafter, 1047, we took the 2-step short. Breaker long, 2-step short. We're always looking for that 2-step counter trend whenever we have a big run up like this. So what do? We mark this swing low. The swing low here was at 16. And again, we're going counter trend trade here, guys, according to our rules. Looking for, as you guys can see, right, 1, 2, 3 triple tops. Looks like a pretty nice head and shoulders pattern, right? There's your head, there's your neckline. And of course, when we break below that, there's your 2-step short, 1047. 13 was the fill. We took another 8 ticks out of the market for their 80 bucks there on that back-to-back winning trade. So 16 ticks there in a matter of 10 minutes there on the crude. Let's keep moving. Now the final trade today, guys, final trade today almost took us some money back, but we were a little bit too smart for it. We knew exactly what we were waiting for here. Once again, trading with the trend, right? Downward trend. You can tell I got a nice steep slope to my trigger line. Now we missed the first entry here, right? Missed the first one because we had momentum was pointing up. So we didn't take the first trade. We looked for the second. Now, of course, we had another swing low marked up here at 28s. We got in short at 25s. However, big problem here, though. We then watched as we had 3 things. MACD curled, momentum curled, and the pace of a tape curled that told me, Joe, get out of this trade. What I did was I then took my stop, moved my stop down to my point of entry, let the market then decide what it wanted to do. What I knew was my indicators were telling me get out of this trade before you lose your shirt. So I got out of that trade by moving my stop down to my entry. That way, if the trade did work for me, I was still in the trade. But if it reversed, I would, of course, be taken out at my point of entry. Why did I do that? Because the indicators we look for, the MACD, the momentum, and the red pace of a tape, all of that tells us this is now ripe for reversal, so I need to get out of this position. We did so with confidence. Our rules line up. We don't second guess them. We follow our rules. And again, guys, this helped keep that 46 ticks we already made. This kept those ticks in our pocket and, of course, allowed us to finish up our day in the green. So, guys, 46 ticks here total on crude. And again, guys, come out and join us on Monday morning. The live room opens up at 7:45 a.m. Eastern Time. The European session is currently suspended right now, guys. We'll give you a free 3-week trial. Come out and join us. Grab a copy of the beginner's course on the way into the room on Monday morning. Please rate and comment on this video. For more information about lifetime membership, guys, drop us an email at sales@schooloftrade.com. As again, my name is Joseph James. Hope the video helps. We'll see you guys Monday morning, 7:45. Don't miss a tick. Bye-bye for now.